Three.
Hello, everyone, and welcome to Under One Roof's latest webinar, Exploring Building Reserve Funds. My name is Mike Efron, and I am the director of Under One Roof. Under One Roof is Scotland's only charity that is dedicating to supporting owners of tenement flats and related building professionals with organizing common repairs, maintenance, and retrofit. We have existed for a few years now and have hosted many webinars such as these. You can go back and look on our YouTube page to find any number of topics covered on webinars, in our webinars, on all sorts of subjects that might be something of interest to you. The focus for today is on building reserve funds, or what we call sinking funds. Some call sinking funds. And we are joined today by Gillian Campbell. Now, Gillian is an independent housing consultant and has worked in the housing sector for over 25 years with local authorities and housing associations before setting up a consultancy firm, Gillian Campbell Consultants, in 2018, as well as providing consultancy services to a range of housing organizations. Gillian's also director of the Existing Homes Alliance, which we are members of as well, a coalition of housing, fuel poverty, environmental, and industry organizations calling for action to transform Scotland's housing stock to tackle fuel poverty and meet climate change targets. So welcome, Gillian.
Good afternoon. Lovely to be here. Thanks for inviting me along.
So just to give you everyone that's taking part a idea of how this will go, we have, as you will probably see, but if not, click on it up to open it up, a chat box. That would be an opportunity for you to pop in any questions that you have. Rebecca, who is helping us out with, she's our comms officer here at Under One Roof. She'll be monitoring that, making sure that those questions go into the right box, and so we can take a look at them and answer them. If you have any questions over the course of the webinar, we have a space at the end reserved for just going through those questions. If for some reason we're out of time or we can't answer them, we'll get back to you, get your contact details, and get back to you. And I believe, Rebecca, also that the webinar will be mailed out to anybody that had emailed out to anyone that takes part or registered for the webinar, so you'll get a copy of this as well. So if you want to go back and take a look at it, Under One Roof has a ton of information on our website related to all things related to common repairs and maintenance and retrofit when it comes to tenement buildings. And just to be clear, when we talk about tenement buildings in Scotland, we're actually using the legal definition. So it's not just the old stone tenement buildings that most people are familiar with. It's all basically a good catch-all would be flats, for the most part. All flats that are not social housing would be considered tenements, and part of what we'll be talking about today. So first, before we get to Gillian, has done some excellent research into potential future model for what building reserve funds could look like in Scotland going forward, it's probably a good idea just to give you a sense of what the current status is. Now, there is no reason why you cannot organize a building reserve fund right now. You can do this. Though the difficulty is that it's which Gillian will get into in a little bit more detail, is sometimes there's a few barriers that are a little hard to overcome without a little bit of extra work. So if you are in a factored building, it's a little bit easier because the factor can actually probably hold the money that you would want to put aside for a building reserve fund, for example. But if you're trying to organize it yourself, because owners associations, which you will need probably to get this a building reserve fund up and running, are not able to be incorporated at the current moment, it's difficult to open bank accounts. So your options for bank accounts are somewhat limited to charity and community club type bank accounts. Gillian we'll put if we haven't already, I believe, but if not, we've got a link to the report that will touch upon some of the options you have for using current models for current bank accounts, I should say, for building reserve funds, but there's usually a limit into what you can actually put into those. So that's one of the barriers. And it's important to note too that for those who are just sort of new to all this, building reserve funds are essentially sort of something that you're talking about future repairs, right? You're talking about spreading the cost of works that you will have to do in the future over a generation of owners. So the advantage of this is that owners who sell just before a major repair comes up will already made a contribution. New owners who have just purchased do not have to pay the whole cost. The value of the building reserve fund essentially becomes part of the value of the property. It's probably a way of thinking about it is sort of like what we say is it's a bit of like a pension arrangement for the building. So again, this is about the building reserve fund is about putting money aside for future repairs, as opposed to something when you're actually talking about repairs that need to be done now. And that's sort of a different question about how to raise funds to actually get the repairs done now rather than saving money and putting it aside for the future. Gillian is also worked on a report that we are be ready to put out just at the beginning of April, so just a month away, in a PDF and a hard copy. It talks about what funding there is available for doing repair works for in common areas of the building. Just not to get your hopes up, there isn't much, but there are a few options depending on what kind of works you're doing, whether you're doing retrofit or repairs. Now, building reserve funds, like I said, they're not floats. These are things for major repairs of the building, so not just sort of the minor sort of fixing that needs to be done. When you set up a building fund, you're often going to need to change. You're probably going to need to change the titles to ensure that the funds are what we call hereditary. I.e., the fund stays with the building, so that when an owner sells, the money that has been contributed up in the building doesn't go with them. It stays in the building, and the new owner coming in can benefit from that and is not responsible for paying a full share. They'll benefit from the fact that there'll have been money contributed in. And the other bit of that is, of course, is that new owners can't opt out of contributing. That's the important thing about changing the title deeds when you're doing that. Now, changing the title deeds does have a cost to it. You're probably going to need to speak to a solicitor. You're going to need the agreement of all the owners to have that inserted into all the title deeds. You can't have one. You can't have some of the title deeds saying it and some of them not. You need all the title deeds to be changed. But it is possible to do. It's just a bit difficult to do when it's not something that is required of all owners in Scotland to do so. And then finally, it's just a question of working out how much you want to contribute over what period of time. Now, the thing about it is it's future works. So it's very possible that you will not raise enough money over monthly contributions to maybe fix the roof with everything from your building reserve fund, but it will take the sting out of it if there's a significant amount of money that has been built up over a period of year or two. So yes, you're going to have to pay, but a chunk of it probably immediately, not from money that's saved up, but at least you've taken some of the sting out of it by having that money, some money put aside that can be put toward it, and that definitely will help, particularly in some of the large projects that you might need to do. So that's an overview of what the sort of situation is now. But the reason we wanted to have this is that Gillian, this webinar, is that Gillian had done some excellent work for Under One Roof, examining the question of building reserve funds as going forward in Scotland, as far as taking a look at what is done in the rest of Europe and what would be a good model for Scotland, and what are the key bits to make sure that it works based on taking a look at what's working and what's not in the the rest of Europe. So, so what I think I'll do is just turn it over to Gillian, and she's got an excellent presentation that she can go through. And then once we're done, we will put your questions in to the chat, and then we'll come back to it, have a little discussion, and then we can answer any questions that you have. So, Gillian, over to you.
Great, thank you, Mike. Just shared my screen. Can I have a quick nod to check that everyone can see that okay?
Yep.
Fabulous. Okay, thanks again, Mike. I'm going to give an overview of this recent research project looking at building reserve funds for flat owners and how they could potentially operate in Scotland. And thanks to MCS Foundation for supporting this work. First of all, just a bit of sort of background and context. We all know that managing common repairs and maintenance of tenements and flats is extremely complex, and this has contributed to a significant proportion being in a poor state of disrepair, many in critical disrepair. On top of this, over the next 20 years, the vast majority of Scotland's homes, including flats, will need to switch from fossil fuel heating to zero direct emission systems like heat pumps or heat networks. Now, that transition is going to require homeowners to work together, not just to ensure that homes are in a good state of repair, but also potentially to improve the energy efficiency of buildings, reducing energy demand to make homes more affordable to heat and reduce pressure on the grid. If we don't tackle the challenges through simplifying decision-making and addressing the cost of works, there is a real risk that people living in flats could be left behind in the transition to clean heating, and the condition of Scotland's tenements will continue to deteriorate. Now, we have been struggling with this for years. It's not a new challenge, and I'm sure many of you on this call will be very familiar with the challenges. But going back a little bit, the Tenement Maintenance Working Group published its report back in 2019, which set out 3 interconnected recommendations aimed at simplifying and dealing with the challenges we face. First of all, that tenement buildings should be subject to 5 yearly building inspections. Secondly, that compulsory owners associations should be established for every tenement building. And finally, that owners should be required to contribute to a building reserve fund. Now, the Scottish Government accepted these recommendations, and significant progress has been made on the Owners Association front, with the Scottish Law Commission's report and draft bill published in December of this year. And that bill would, if taken forward, would establish owners associations for every tenement in Scotland. A subgroup of the Tenement Maintenance Working Group has taken forward developing a model for 5 yearly inspections, although any government action has been lacking on this front. And on building reserve funds, the Scottish Government commissioned a report from the Diffley Partnership a couple of years ago, but there's not been really any particular progress since then. So the aim of this research project and report is to try and get things moving on the building reserve fund front. We have a great opportunity with the recent publication of the Scottish Law Commission report and draft bill on owners associations. We have a really good opportunity to get us to a place where we have the infrastructure in place that enables better decision making and supports flat owners to meet the costs of future works. So this report looks at international and UK approaches to building reserve funds. It explores the practicalities of how the funds should be established, managed and maintained. It considers protections required to ensure that they are used appropriately and that vulnerable owners are not disadvantaged. It looks at issues around minimum contribution requirements and how contributions should be determined. And it considers how to address the challenge of Scotland's significant backlog of repairs and how that interacts with forward-looking building reserve funds. Now, as well as desk-based research and literature review, this research was informed by engagement with a wide range of stakeholders, including those involved in the management and maintenance of tenements, local authorities, housing associations, building surveyors, architects, lenders, insurers, insurance industry, and critically, the house buying and selling industry. So first of all, looking at what the research learned from looking at what was happening in Europe. First of all, around 47% of the EU's population live in apartments. Now that's higher in Scotland, where around 32.4% of us live in flats. Over the years, countries across Europe have been developing approaches aimed at supporting effective management and maintenance of apartment buildings, as well as paving the way for increased retrofit activity to upgrade energy efficiency and switch away from fossil fuel heating. There are opportunities to learn from these experiences, particularly from those countries that have amended legislation in recent years in light of their own experiences and lessons learned. So I looked at approaches in Spain, Germany, the Netherlands, France, and Ireland. All have different approaches, but most do have a longer standing culture of property management, which is lacking in Scotland. We do need to bear in mind that different context when we're looking to learn lessons, because there are some fundamental differences. The common features across these 5 countries that I looked at were that contributing to building reserve funds is mandatory for apartment owners. Deposits are not recoverable by the owner and remain with the fund on the sale of the property. Separate bank accounts are required for building reserve funds, so they have to be held separately from the account that deals with day-to-day expenses. Most of the countries have fairly established systems of collective ownership and governance, and professional property management as common practice. But in spite of all of this, they do all still have challenges with underfunding of building reserve funds. So the key lessons learned from looking at these countries' experiences was that, first of all, there is likely to be a tendency for owners to set contribution levels below what would be required to deliver an adequate building reserve fund. Experience suggests that it's beneficial to have clear guidance on appropriate contribution amounts. Where this has been lacking, a number of countries have amended law to clarify or to introduce minimum contributions. Enforcement across the countries looked at tends to be property manager or owner-led, with a limited role for state monitoring and enforcement. In some countries, contributions are linked to long-term plans. Netherlands, France, and Ireland, for example, all through mandatory multi-year maintenance plans, while Germany and Spain tend to rely more on annual assessments. What was interesting was that a lack of understanding of the purpose of building reserve funds, along with a lack of building condition information, clearly reduces owners' willingness to contribute to funds. So information and communication is key to compliance. There's also been significant legislative reform in recent years in a number of countries seeking to overcome barriers to energy efficiency and renewable heating and cooling investment in apartment buildings. And we do have an opportunity now to be creating legislation that not only helps address repairs and maintenance, but is also future-proofed to ensure that flat owners aren't left behind in the transition to clean heating. So after reviewing practice elsewhere, I then looked at developing some core principles for building reserve funds in Scotland. Now, these were based on options analyses, considering the pros and cons of various approaches, and looked specifically at whether building reserve funds should be mandatory or voluntary. Should there be minimum contribution requirements? How should contribution levels be determined? How should the use of building reserve funds be determined? And how should contributions be enforced? Now, first of all, stakeholders engaged during the project very clearly supported a mandatory approach, with a strongly held belief that without legislation, a legislative driver, minimal progress will be made. And parallels were drawn with from the rent deposit scheme, where participation levels were low while the scheme was voluntary. In terms of requiring minimum contributions, three options were considered. First of all, mandatory participation, but with no prescribed minimum contribution. Secondly, mandatory participation with non-statutory guidance on minimum contributions. Now, this could recommend methodologies for calculating minimum contributions, but ultimately it would be up to the Owners Association to choose to follow the guidance and to set their own contribution levels. And then thirdly, the third option was mandatory participation with statutory minimum contributions. This could be based on property value, building age, property type, or building survey findings. Now, European experience does suggest that requiring contributions without specifying minimums can lead to underfunding. For example, in the Netherlands, an obligation to contribute to a reserve has existed since 2008, but research shows that just over 50% of owners' associations had sufficient funds. They amended their legislation in 2018 to require a minimum contribution based either on a percentage of the rebuild valuation or on an amount based on a multi-year maintenance plan. However, this is an example where it is important to recognise the context in Scotland rather than seeking to copy and paste from elsewhere. We are starting from a pretty low base in terms of property management in Scotland. So while mandatory minimum contribution, ideally based on a 5-yearly inspection, may be the optimum solution, there's a high degree of political risk with this approach. We don't have yet a regime in place for carrying out 5-yearly inspections, for example. So the report recommends that participation in building reserve funds should be mandatory, and the owners' associations should be required to carry out 5-yearly inspections. It recommends that owners' associations must agree reasonable contributions, and these should be informed by a 5-yearly maintenance report. However, the report does suggest that this will need to be phased in given our starting point. And where no inspection report is in place, the owners' association should agree an alternative mechanism to determine contributions until such time as a 5-yearly maintenance report is in place. Now, that mechanism should be based on non-statutory guidance produced by the Scottish Government that would set out a range of mechanisms for determining contribution levels, with the advantages and disadvantages of each. In terms of future-proofing, the report also recommends that owners' association legislation should give Scottish ministers powers to review effectiveness and to introduce statutory minimum contributions through secondary legislation if it's deemed necessary. In terms of how the funds can be used, it's recommended that legislation should specify what the reserve can and cannot be used for. Legislation should be clear that the Building Reserve Fund cannot be used for day-to-day expenses such as stair cleaning, grounds maintenance or maintaining a small float, but it can be used for works required to comply with the duty to maintain, works arising from any longer-term maintenance plan adopted by the Owners Association, and works arising from any retrofit plan adopted by the Owners Association. Now, in relation to enforcement, largely speaking, the market should drive compliance, with the Home Report identifying whether a reserve fund is in place and the value of that fund. And the value of the fund would then drive the valuation of the property and any offer price. However, there will be a need for further enforcement mechanisms to ensure compliance. It needs to be recognised that there is, and will likely continue to be, limited capacity within local authorities to take on any further enforcement duties in relation to building reserve funds. Therefore, alternative mechanisms for enforcement should be considered. Options considered as part of this research included making it a requirement of buildings insurance or mortgage finance, requiring registration at the point of sale, enforcement through the first tier tribunal, and local authority enforcement. Now, lenders and insurers who I did speak to as part of the research were clearly not particularly keen on taking on any enforcement role, and would argue that their role is essentially to provide products and services, not to regulate. And there's also an additional risk that by placing additional burdens on lenders and insurers, there's a risk that they start to withdraw from the flat market. So the options analysis concluded that an approach similar to that taken by European countries reviewed would be the most appropriate and proportionate for Scotland. That would be based on the Owners Association manager enforcing any obligation through the courts, and in line with proposals from the Scottish Law Commission, enforcement should be through the first tier tribunal. So moving on a bit, assuming we have a new legal requirement for owners' associations to establish a building reserve fund, and once owners' associations have determined, and once owners' contributions have been determined, the owners' association will then need to be able to access appropriate accounts in which to deposit funds. So as part of the research, I looked at the current market capacity to support building reserve funds and opportunities for creating new products. Now, currently, as Mike mentioned earlier, there is a lack of products specifically designed to enable multiple owners to deposit funds into a reserve. In contrast, some European countries with established building reserve fund systems have tailor-made accounts. For example, in the Netherlands, major banks offer owners' associations specific accounts with separate provisions for operational costs and interest-bearing reserve fund accounts. They can also include online platforms, enabling transparency and integration with property management software. The European accounts identified through this research do tend to be largely targeted at property management companies, and research does suggest that in spite of the funds being mandatory, there is still a shortage of appropriate accounts. So to encourage market development of these kinds of accounts in the UK, there are a number of barriers that must be addressed. Firstly, there's clearly a lack of demand. Banks will only create products if there's a market for the products. So any legislative requirement, for example, through owners' associations legislation, would immediately create a sizable market. And engagement with the banking industry representatives suggested that mandating building reserve funds would be welcomed. Secondly, the legal status of owners' associations must be addressed, and Mike touched on this in his introduction. The Scottish Law Commission's proposals would create owners' associations as legal entities, so with legal personality, able to enter into contracts in their own name and to hold a bank account as an entity. It should also give owners the ability to own property or assets collectively. Thirdly, some banks expressed concerns about the practicalities and complexities of managing these kinds of accounts. There is a need for further exploration of the role of technology in addressing some of these challenges, learning from what already exists, not just in other parts of Europe, but also learning from models here, like Novoville's shared repairs app and their partnership with the e-money institution Modular. Finally, there is uncertainty about whether owners' associations would be taxable entities, so clarification will be needed on the treatment of any interest earned on building reserve funds. The report identifies key features for appropriate banking accounts and explores potential models for service provision. In terms of future solutions and potential providers, there is a role for both traditional banks and e-money institutions. Traditional banks will have an established infrastructure and ability to offer interest-bearing accounts and loan products, whereas EMIs don't lend money and don't provide interest-bearing accounts. So there is a scope for creating hybrid models, combining more advanced digital platforms with traditional banking infrastructure, potentially enabling provision of more tailored services for owners' associations, but with traditional banking products. Over time, specialist providers may emerge. For example, Germany's 1031 Bank was founded in 2015 and has its origins in a large property management company. It provides tailored services and products for owners' associations, including interest-bearing accounts and enhanced protections. This demonstrates that with sufficient scale and certainty of demand, the market can provide appropriate solutions. Now, of course, it's important to recognise that not everyone can access mainstream commercial products, and there is a risk of owners with less financial capacity being excluded. There will be a need for some kind of government intervention to ensure access for all, or to provide a backstop arrangement for those who can't access market products. Two options were considered as part of this research. Firstly, a national deposit scheme modelled on tenancy deposit schemes. And secondly, Scottish Government or local authority partnerships with credit unions. Firstly, the national deposit scheme, and there are strong arguments for a government-backed national deposit scheme. Some kind of safety net is needed for households that can't access traditional banking products, and it presents an opportunity to pool deposits and potentially use interest on that capital to provide financial support to low-income households. However, there are significant risks with that kind of approach. The costs of setting up a new government-backed scheme would mean that unless it was mandatory, the value of any surplus generated could potentially be pretty small. The impact of scheme failure could be immense, politically and other ways. Liquidity management could also be complex. The scheme would need to ensure funds are always accessible, which limits ability to invest in returns, limits ability to invest for returns or provide low interest loans. The report identifies that a lower risk approach would be for government, either Scottish or local government, to enter into partnership arrangements with high street banks or credit unions to ensure affordable banking products are available for all. The most appropriate solution is likely to be a blended approach with a range of bespoke banking and financial products. Now, given that flat owners are going to be asked to deposit significant amounts to the fund, there is a strong case for consumer choice, allowing the market to respond to demand by developing a range of products, but ensuring a safety net or backstop position for those unable to exercise choice. Now, one of the challenges in implementing building reserve funds is the current condition of Scotland's tenement housing stock and the significant backlog of repairs. For many buildings, it will take years, if not decades, to get to a position where a building reserve fund exists that can be used for future works and not catching up on this backlog. So alongside building up a building reserve fund for future works, the research looked at ways to potentially support flat owners to address the backlog. There are a number of options for supporting owners to create workable reserves more quickly. These include transaction-based approaches where the buyer or seller contributes a lump sum at the point of sale or purchase. The point of sale contribution is an approach that's already used in the UK in some cases, with the obligation written into some titles. An alternative to this could be ring-fencing reserves for a period of time to allow the fund to build up. Any works required during this period would be met by owners from their own reserves in the way that it would be at the moment. Another option is for government to provide a kickstart grant, although that does seem quite unlikely in the current context. And as well as accelerating the build-up of funds, we'll also need a range of financing mechanisms to support owners to pay for the works. The starting point should be that the owner pays for the works, and with the right legislation and with owners being able to access credit, there is potential for a market-led financing mechanisms to be developed. There are European examples, such as Spain's UCI Bank, that offers loans to communities of owners rather than to individuals, and that loan funding can be integrated with government grants for renovations. Now, that model has the backing of the European Investment Bank, but there is potential for here in Scotland for us to explore whether the Scottish or UK investment banks could play a role in backing similar schemes. Now, while many owners will have capacity to fund the works themselves, either through savings or through new or existing market-led finance products, additional mechanisms will be needed to ensure access to funding is available to all. Now, while several Scottish credit unions already offer home improvement loans and green loans to individual members, there is scope to explore how they could potentially extend their services to meet the financing needs of owners' associations. Lendology is a community interest company that works with local authorities in the south of England to provide a range of loan products with lower interest rates. They offer a range of financial products, including home improvement loans and renewable energy loans. Loans are secured through a title restriction on the property, and Lendology can structure the loans so that no repayment is required until the sale of the property. Each local authority involved in that Lendology partnership has its own policy, funds are limited, and loans are targeted at homeowners who may find it challenging to access credit elsewhere. The local authorities support Lendology's operating costs and underwrite debt, allowing lower interest rates to be offered. A collaborative approach could potentially see credit unions continuing to offer personal loans to individual flat owners for smaller scale repairs, while a Lendology-style council-backed scheme could potentially be developed to support financing larger owners' association projects. Another option would be for the Scottish Government or local authority-backed equity loans. There is precedent for this in Scotland. For example, City of Edinburgh Council piloted a scheme of assistance approach back in 2005 that enabled owners to access a couple of different equity loan models through their homework service. They were targeted at people participating in council-led mixed tenure projects, older households, and people with disabilities. Property-linked finance is also an emerging mechanism that's commonly referred to in relation to funding retrofit projects, but this model could potentially support tackling the backlog of repairs as well. With this model, the debt rests with the property rather than the owner and transfers to subsequent owners when the property is sold, allowing repayments to be spread over a much longer period. It's not currently operational in the UK, property-linked finance, but Transition Finance Scotland and the Green Finance Institute have been working with both the UK and Scottish governments to develop models for potentially for use here. And finally, if we are serious about addressing the condition of Scotland's tenements, it's highly likely that there will be a need for direct government grants and loans. There will be some households and owners' associations with inadequate reserves and significant backlogs and with no ability to access any of these other mechanisms. Now, the introduction of building reserve funds, as I'm sure you all appreciate, would be a significant change, and the approach to rolling them out needs to be carefully considered in terms of fairness and affordability, and also in terms of practicalities around implementation. Now, this slide is very much an indicative or illustrative timeline, but the point is their introduction needs to be seen as part of a long-term programme to modernise flat ownership. They do need to be phased in as part of a wider package of policy measures aimed at changing culture and attitudes towards flat ownership in Scotland. And that will mean input from a wide range of stakeholders as well as government. And it will mean some organisations having to rethink some aspects of their business. This will impact on everyone who owns or manages flats. That includes private and social landlords as well as individual owner-occupiers. Now, while having the right legislative and financial frameworks in place is essential, equally important is the communications and awareness raising that must precede change. Introducing new requirements without making that investment is likely to provoke a backlash. So central to the implementation of building reserve funds will be the role of the house buying and selling industry. Solicitors, estate agents, surveyors and mortgage lenders guide people through property transactions and have a significant impact on buyer and seller expectations. We need to get to a stage where before someone buys a flat, they understand the full costs of ownership, not just mortgage and council tax, but also ongoing repair and maintenance obligations. In the shorter term, we could start to see changes to the Home Report, for example, and online property portals promoting the concept of building reserve funds to help to mainstream the idea. So to recap, the report recommends that establishing a building reserve fund should be a mandatory requirement, a duty of owners' associations. Contributions should be reasonable and based on 5 yearly building inspections. Block buildings insurance should also be compulsory. The Scottish Government should prepare guidance on contribution methodologies, and ministers should have powers to introduce statutory minimum contributions through secondary legislation if required. Legislation should specify how funds can and cannot be used, and enforcement should be through the first tier tribunal. In terms of financial products, the report recommends the creation of a blended approach with a range of market-led products, but with backstop products to ensure no one is excluded. The report recommends setting up a tenement maintenance finance short life working group to support the development of products, and recommends support to grow and professionalise the property management industry. In terms of addressing the backlog of repairs and maintenance, owners' associations should be able to access credit collectively. Financing mechanisms will be required to unlock investment, including loan products for owners' association. Equity release and property links finance should be developed further. Finally, there will be a need for grant funding, not just for those who don't have access to any of the other financing mechanisms. So what next? Well, we do hope that this report will kickstart discussion and action from the Scottish Government, and also potentially form the basis of amendments to future legislation introducing owners' associations. Building reserve funds are definitely not a silver bullet, just like owners' associations and maintenance inspections aren't silver bullets. But when implemented as part of an integrated system alongside awareness raising, culture change and growth of the property management industry, they could provide a sustainable solution to long-standing challenges of tenement maintenance and management in Scotland, paving the way for upgrades that will be needed as we move away from fossil fuel heating over the next 20 years. Thank you very much. And I'll stop sharing my screen. I'm very happy to take any questions or open up for discussion.
Great, thanks so much, Gillian. That was fantastic summary of what was a lot of really interesting information in there. We've got some questions in, I think, and they cover really a wide range of issues, not just building reserve funds, but 5-year inspections and all that. So I think we actually can have quite an interesting discussion about various aspects of this work. So one of the first questions that came in was asking about what you found about how building reserve funds work in Ireland. And so if you could maybe just expand a bit on what you found, particularly what was working. And I know there was some issues around what doesn't work as far as sort of setting minimum contribution levels in Ireland. So I think that would be quite interesting for you to touch on.
Certainly. Ireland is an interesting one because in some ways it's closer to where we are in Scotland, although a much smaller proportion of flatted properties. It's a bit of a cautionary tale, Ireland, actually, because in spite of having legislation since 2011, I think it is, 88% of developments still lack adequate sinking funds, and average contributions are apparently running at roughly a tenth of what's needed. So the core lesson, I think, from Ireland is that without mandatory inspection reports to quantify future costs, owners seem to be quite resistant to paying realistic contributions. I think there's a real opportunity to learn from Ireland's experience and look to develop a system that ensures that any sinking fund regime is built around robust condition assessments from the outset to ensure that we're not having to go back and amend any legislation at the future. So yeah, I think Ireland is a really interesting example. I don't think they've got a full solution in place yet, but it's a work in progress, and we can maybe sort of kickstart things in Scotland by trying to leapfrog them a little bit and starting off with a good legislative framework from the outset.
Mm-hmm. Excellent. We have a question from the property managers over at Spears Gumley. They've mentioned that they have a heavy and increasing workload, though they're supportive of maintenance funds. They know that they're, as many property managers are, supportive of the work of the Tenement Maintenance Working Group on mandatory building reserve funds, because they believe it will make their job easier to do as far as sort of future repairs. They are concerned about the additional duties and enforcement, and this is something that certainly comes up. They potentially are facing it also with compulsory owners associations, and potentially with 5-year inspections as well. So was there anything you found, and there may not have been because you didn't look directly at this, but recommendations for being able to receive a fee for undertaking the service, which they know themselves would not necessarily be popular with homeowners. So I mean, part of it is the question is like, how much work do we think that if we had a successful framework set up, that it would be both for factors and for unfactored buildings?
Okay. Yeah, it's a really good question, and it touches on a few different areas. I think firstly, and this kind of goes back to the culture change point. I think we all need to be much more realistic about how much it costs to manage properties effectively. And that goes back to the fact that people they think when they're buying a house, they think about how much mortgage they can get, basically. And if you're lucky, they might think about council tax. And if you're really lucky, they might think about how much it's going to cost to heat. Very few of them, I think, at this stage think about ongoing maintenance. So that's the starting point. Culturally, the whole system needs to be much more realistic about how much owning a flat costs. And that needs to be reflected then in the fees that property managers are able to charge. I think looking at what some other countries, how they've developed their approaches over the years, I mentioned that a few of the countries, Germany and the Netherlands in particular, were interesting, have their whole owners association system and the banking side is very much geared towards working in partnership with property managers. So a lot of the bank accounts and services are specifically dedicated for the property management industry. So I think what we need to see is a scaled up property management industry in Scotland, but alongside that, this culture change so that we've got a realistic approach. So we're not in the position where owners are resistant to paying a fee because they understand what they're going to be getting for that fee, but also that we need to work with, and this is why one of the recommendations was about establishing a sort of finance working group, short life working group, because we need to start seeing the development of banking products and mechanisms that automate some of this, so it does become easier for property managers as well to actually manage bank accounts. The enforcement side, again, I do feel a lot of this should be in an ideal world, and ultimately we should get to a stage where a lot of this is market driven. So again, what we learned from Germany is that buyers and sellers are considering the level of a reserve when they put in an offer for a price for a property. So I think the market will ultimately drive a lot of the enforcement of this. I think it was Germany as well. Actually, a new house buyer is liable for the seller's debt for a period of time. So they would then consider that obviously in their offer price. So there's ways of ensuring that the market drives compliance, thereby reducing the amount of sort of enforcement required at the end of the process. And again, we're talking about a very long-term rollout program of sort of 10 years or so. So we need to think about how technology can assist us over that time to smooth processes and increase automation of some of these processes.
Some of the, and very much so. I mean, one thing that comes to mind with the culture change is the idea that it just becomes part of the process, right? There's like when people are going to buy homes, buy tenement flats, like there's not a surprise that there's a building reserve fund that they're going to need to contribute towards, or that they will be, you know, at the same time, they will be also empowered to be able to ask what is the level of the building reserve fund. And those are the kind of things that the buyers and sellers can have information and potentially can make more attractive to those that are buying the properties and stuff like that, to say that, yes, there is, you know, because this links in sort of to the next question around 5-year building inspections. But if people have an idea, a real idea of what's the actual condition of the building is, rather than what they see currently in the home report, which is not an accurate condition of the building survey. But if they actually had inspection reports they looked at and saw, yes, there is problems that are going to need to be addressed. However, we also have a building reserve fund that has built up this amount of money. And so when you come in, you will be able to benefit from that building reserve fund. And again, we're talking decade to getting up to this point. This is something that's certainly going to be rolled out over a period of time. And even, you know, even if you started it tomorrow, building reserve funds are not going to get to the point where you're covering major works for, you know, for a few years. So it's something that needs to be phased in, I think is the key. This is not something that's going to be dropped on people. So people can have a real think about it, and it becomes part of the culture of it. Somebody had made just a comment in there about sort of there being what they say is more problems than solutions for the elderly and vulnerable. Is there, you know, is that something that you came across in your work? Is dealing with that particular segment of the ownership, the owners of tenement flats, as far as sort of what can be done to mitigate that?
Not when looking at the international examples, but thinking about particular solutions for older households. I mentioned in the presentation and in the research that there are some UK examples of sort of contributions to building reserve funds at the point of sale or purchase. Actually, these are most commonly used for sort of retirement type properties when they're written into titles. So it's an area where there is some precedent here. And I also mentioned the quite old, 20 odd years old now, scheme in Edinburgh Council, under their homework service, where they had equity loan products for specifically targeted at older households and vulnerable households, particularly to support mixed tenure areas. So areas where you're likely to have lower levels of equity and lower ability to access mainstream market products. So that yes, it is a challenge. We need to make sure that we have a range of products available that ensures that nobody is left behind. But I think I did make the point that we have to be realistic about the fact that some people will not be able to access any market or private mechanisms. So I'm firmly of the view that there will be a need for some grant intervention if we're serious about tackling disrepair.
Yeah, no, I think, and that's the difficult one, and grant allocation in the private sector is a particularly tricky one, and one that's not really that seriously actually looked at. There certainly is a case for it, but the problem is that you're competing with limited resources, and you're within the concept of you're in the housing realm, right? So we've got a problem of underfunding of homelessness services. We have a problem with underfunding of social housing. So it's difficult politically to make the case to be funding private owners, no matter what the reality of the situation is, which is that private owners are not all well off, and that there are a number of the unfortunate thing is we don't have a lot of data on this. The Scottish government does not pick up data, and neither does the housing sector have the ability at the moment to sort of collect up data on private owners in particular of flats and what is the economic condition of people that own those flats. But the truth of the matter is we know people inherit flats, people in the right to buy situations, they may have bought their flat back then, but are not particularly they're not doing well in the general sense compared to some of the other private owners as far as having extra funds to be able to pay for things. And in fact, to a certain extent, people that bought their flats back in the 80s were not, in my view, not accurately told what the future costs would be. There was an expectation the council would come in and continue to fix those buildings. And it's now evident when I see and speak to people at events that are mixed tenure, where you've got some social housing and then some private housing, people that have bought their flats years ago. And the people that bought their flats privately are quite upset about the fact that that they're having to pay for a share of the repairs. And in fact, it probably should never have happened. So yeah, it's a difficult one to sort of unpick on that.
If I can just jump in
Yeah.
and add to that, I mean, absolutely, the right to buy legacy is a real problem. There are huge numbers of flat owners who didn't fully understand or weren't told what their obligations would be. And I do think as a society, we have a duty to take that on board and try and address that. But I think we also have to recognise that lenders do have an actual interest in making sure that flat owners are able to maintain their property as well, in terms of protecting their investment. So I think the more certainty the finance industry has around a sort of a future market, the more likely they are to develop a wider range of products that will be accessible to a wider range of potential customers.
Yep. No, exactly. We've got a question actually so you touched upon this briefly, but who do you anticipate producing 5-year building inspections? What would these reports look like, and what would there be a format to follow? That's probably a question for both of us, actually, so that we could probably discuss a little bit. So we're hoping, first of all, Under One Roof is hoping to have Gillian do some work on this very topic in the similar way that she's looked at building reserve funds. Largely because the Scottish government has, like she mentioned earlier, has committed to mandatory owners association, building reserve funds, and 5-year inspections. And we think there is a lack of data, we think, out there on 5-year inspections and what is working, what is happening in other places, and what would be a workable model. So I'm hoping to get to be able to bring Gillian to do this very report and get something out soon. And if you'll definitely hear about it if we do, because we'll be having another webinar similar to this to have a similar discussion on it. But right now I can say the work that's going on in the cross-party tenement maintenance working group in Scottish Parliament, which we actually, Under One Roof, acts as co-convener of this group. There is a number of people that are architects and surveyors, other housing professionals that are taking a look at this very question: what does a 5-year tenement inspection report look like? And some of the ideas that have just been thrown around are on issue, like something along the lines of a traffic light system. Because the important thing about an inspection report is that it will identify any number of problems with the building, but not all of those issues need to be addressed immediately, sort of like a building MOT, right? You don't need to necessarily do those repairs, but you should be aware of the fact that you're going to need to start saving up for it. That roof, is starting to go. It's fine now. It's not leaking, but give it 3 or 4 more winters of driving rain. And it will be needing repair. So you've got to, and that might be a yellow, for example, right? So something along those lines is, and like I said, it's at a broad frame right now. They're trialing out some different ideas on that. And there is some chat too about linking this up with something called HEATSA, which is something that's going to take a look at energy efficiency of buildings as well. So there's something that in there potentially around linking this to retrofit and energy efficiency, the inspection report. So we'd be able to combine both of those things. So again, early stages, and a lot of it is just sort of background chat that we're hearing through our contacts in the sector and in government. But those are the different issues that are being raised right now as far as how those inspection reports work. There are a number of sort of things that need to be taken a look at, including the impact on the market. If people know the actual condition of the building, then you could see a significant shift in the value of homes. And that freaks all politicians out all the time. And so that is going to be something that's going to need to be looked at. I mean, the alternative is that people don't get the truth about the condition of the building. So, I mean, the argument against it is strong. It's just sort of like people are going to have to calm themselves down, and there may need to be a very needed correction in the market about the actual value of these buildings. But to an extent, housing value is based on location, so people are willing to pay all sorts of money if they can live in certain parts of town rather than the others, no matter the condition of the building. So maybe it won't. The other issue that always strikes me on this is if you know the condition of the building through an actual inspection report, like if the public has access to these, then you potentially are not going to want to buy a building that has a roof that is in need of major repair, and that you're going to end up having to pay a share of, even though you just moved in. At the same time, you might have a seller who wants to fix the building. They're willing to put forward the money to fix the condition of the building. Because they know that they're trying to sell, and they are trying to, they're going to find it difficult to sell for the value that the flat is, if there's building works that need to be done, significant building works that need to be done. The problem is with all this work around tenement common areas of the building is that you need a majority of the owners to agree. So what happens if you've got someone that can't convince the other owners to do the works, even though they want to do the works? They can't convince the other word. Do they get stuck? Do they end up selling their flat for way less than it should be? Is that just how it works? That's how it's going to have to happen. These are a lot of these difficult questions that are going to need to be teased out and looked at what other countries are doing on this particular aspect. Again, we're talking culture change. And one major culture change would be people knowing that live in those buildings, knowing the condition of the buildings, and the people buying knew the actual condition of the tenement buildings. That would be a significant culture change. The home report was a step in the right direction, but the home report section on evaluating building condition when it comes to tenements is practically useless, as far as it'll be a surveyor looking at it maybe through binoculars on the road. This is not an actual sort of condition report. And there doesn't seem to be any interest at the moment from Scottish government of altering the existing home report to do this. So it may need something else, which is a dedicated 5-year tenement inspection report. And if they're serious about bringing in energy efficiency requirements, then that may actually be linked up, so you can get an accurate assessment of what the energy efficiency is of buildings and what can be done on those. So, Gillian, is there anything you wanted to add to that?
Not really, just to that sort of integration with the sort of longer term retrofit plans is something that's really taken off across Europe. There's growing interest in developing sort of building passports or MOT processes that are integrated with longer term retrofit plans, so people can have a sort of long term plan of what they need to do to upgrade their home to get to zero emissions heating. And that starts with the repair and maintenance bit, getting that right, and then gradually moving towards the point where you've got an energy efficient zero emissions heating home. So yes, it's not, we're not doing this in isolation. It's happening all over the world.
Yeah, yeah. Well, that just about wraps it up. I think we've gotten to all the questions. If there is a question that you have or that I've missed, please, you can get in touch to us at the website. Under One Roof, we have in the upper right-hand corner a little button that says Ask an Expert. Click on that. It's a very easy form to fill out to ask an inquiry about anything you might have missed today that you wanted to get in touch with us about, or any other inquiry that you might have about organizing common repairs in your building. We could ask one very big favor of you. We have in the chat room, right at the bottom, there's a little green thing that says, well, it's a green graphic, but it says, please take a moment to fill out the short survey. The survey results do us wonders in both trying to figure out whether or not we've hit the mark as far as what we're talking about, how to improve. They're also the kind of thing when we anonymize them, but helps us with funding. We're a charity that gets our funding from private foundations and from local authorities and Scottish government. And when we can show that we've provided you information that helps, that makes a dramatic difference in whether or not we can continue to do this work for you. So you could just, I think it's 5 questions. You can do it probably under a minute. But if you could fill that out, that would be fantastic. I'd like to thank Gillian for taking part today. It's always great to chat with you, Gillian, on this, and looking forward to continue to work on this issue. We'll keep you in touch through Under One Roof's newsletters, social media, about the legislation. We're expecting to see any potential legislation in the next parliament. We won't see anything before the elections in May. But we're looking forward, hopefully, in the next parliamentary session, hopefully in the first year, to get some progress on this and get some actual legislation going. We'll keep you up to date on that, and also on our research work on building reserve, or sorry, on 5-year tenement inspections, which we hope to get out. So, on behalf of Rebecca, Gillian, and the rest of the team at Under One Roof, thanks very much for joining this on a Friday, and we look to again and hopefully see you very, very soon. Thanks very much.
Thank you, Mike. Thanks, everyone.